Hey guys, it is Garrett Stewart with Keller Williams Group 1 here in Reno, Nevada. I am here with Leo. And Leo, why don't you introduce yourself?
Hey guys, Leo Sarah here with Guild Mortgage Company. I'm a loan officer here in beautiful Reno, Nevada.
Thanks, Leo. So, I wanted to bring you by today because, a lot of people looking into getting into the real estate market, maybe buying for the first time, or maybe they haven't bought for a while, and wanted to see what the process would look like for them. So, from the first thought of maybe we should buy a home, where do they go from there?
So typically when they do start that process, initially it comes from a source, whether they came from a real estate agent or they were just looking online looking for how do I begin the mortgage process. So typically we'll pick up the phone call, and what we call that is the pre-qualification process.
Okay.
We're having a very informal, very low-key conversation about your finances, where you work, where you've lived the last 2 years, and with that I'm able to then put that into a system and run it and see, based on the information they gave me, are we able to pre-qualify for a home? That's your preliminary. We're just having a very informal talk, and we're going to run with it and see where it goes.
Okay. And so once they start looking at some homes and they're ready to put an offer in, where do we go from there on your end?
So once we're in that position, I've already notified whatever real estate agent they're working with, and I've let them know, hey, they're pre-qualified. Now, back to a little bit of the pre-qualification. That's kind of talking the talk. Walking the walk is, let's see those financials, let's sit down, let's go over your income, let's go over your assets, and let's really start discussing a structure for the purchase on how you want to move forward.
Okay.
Once we've finalized that, we then send that pre-approval letter back to you, and now I've done my due diligence to make sure that this deal is not going to fall out.
Perfect. I love it. So a lot of people, they're looking into their credit score. They're a little nervous about that. We just dealt with a client we got under contract recently where, he was worried that his credit score was not where he thought he could get a loan on. And so he held off on the market. And I said, why don't you meet with Leo? We'll check it out and see where you're at. And sure enough, he actually was a lot better off than he was. So, tell me a little bit more about people and the misconceptions about credit scores.
So that's actually, Garrett, a great question. So typically, like we just experienced, I see tons and tons of people that get fearful of, well, let me work on my credit. And that's what I hear the most. And it's like, well, what are you using to gauge your perception of your credit score? And typically what that is they're using a third-party app. Credit Karma, or there's other parties out there that assist you and help generate your score. So what those companies do is they use a 3.0 Vantage algorithm. And really what that's saying is they're going back from the day you were 18 and just taking an educated guess on what your score could be. We as a mortgage company assess for mortgage risk, right? So our algorithms are way different than any of these other third-party companies. With our client that we just dealt with, he kept getting so antsy, like, I'm working on it, I don't think I'm there. And I said, well, if you don't think you're there, it's not going to hurt you to take a look. Because what the most thing that we deal with is, let me figure it out on my own, let me work on my own credit, and then 6 months down the road, you pick up the phone and call me and go, hey, I'm ready. Then we update your credit, and it's not where you wanted it to be. We're 6 months behind. So in this case, by helping this client and taking a look at his credit score right off the bat, he was completely in shock going, I can't believe I'm ready to buy when I thought I wasn't.
Yeah.
So some of these third-party apps, they can inflate your score anywhere between 100 points up or 100 points downward.
Okay. Yeah, that's, that really can change people's perspective of whether or not they can buy. A lot of people I've been talking about recently too, and on my channel actually, is interest rates. We've been seeing them trend upward pretty much this whole year, and we keep hearing the Federal Reserve expects to raise interest rates even more, which does normally affect the mortgage rates.
Right.
So, with that, what would you advise people right now that are worried about that?
So let's take it back now. 10 years ago, 12 years ago, a normal interest rate was anywhere between 9 and 12%. Okay. Interest rates right now, there's a lot that goes into the interest rate, right? Your down payment, all that. But if we're just going to talk about in kind of a vagueness of interest rates, we're still very historically low. Are the Federal Reserve looking to raise the rates? Absolutely. It's coming. We can't just have an economic jump like we did and still expect rates to be kind of low.
Yes.
What goes up has to come down.
Yeah.
And right now we saw prices increase, great economic growth, but interest rates are now starting to pick up and go, okay, well, if everything's moving here, we kind of start trending that way as well.
Yeah.
So interest rates right now, I don't think that people should be terrified of the interest rate. That's a conversation that we'll have in a very intimate setting of let's discuss where your payment comfort zone is, and we'll really get down to it. But historically low right now, we're somewhere in the fives. So I think that that's definitely not something to steer away from and stop you from buying the home.
Yeah, that's still very low, like
Absolutely.
you said. So, well, I also want to talk about, a lot of people are, we talked about credit score. They might be worried about that or the interest rates. Well, another one I hear a lot is I don't have enough down payment for a new home. So, they say, I need to save up 20%. I want to have a more substantial down payment. What do you have to say to people that are thinking about that?
So don't be feared of the no down payment or I don't have enough down payment. One of the biggest myths that I love to debunk, I call it my own Loch Ness monster, is the 20% down. You don't need 20% down to purchase a home now. Will 20% down do you a justice? Absolutely.
Mm-hmm.
In some programs, you don't have to carry certain things because of the 20%. But there's so many down payment assistance programs, whatever state you're in. Here in Nevada, we see 2 home at last and home as possible, and they require a low entry of 3% or 3.5%, and they'll sometimes cover that down payment. So down payment is not something to be worried about. If that's what's stopping you, please throw that out of the window and sit down and talk to a professional like us, and let's really get down to the nitty-gritty of what we can do.
Oh, awesome. That's very helpful. I think that's going to help a lot of people out there that are, wanting to, get out of paying their rents or, whatever situation they're in and just get out and purchase. So
Absolutely.
Incredible. Well, Leo, thanks so much for meeting with me today. I look forward to hopefully doing some more videos with you.
Absolutely. Thank you.
And, if someone wants to reach you, I'll put their info on here. But what's your phone number?
So, guys, my phone number is area code 775-682-3835.
Awesome. Leo, thanks so much and hope to see you again. And thanks you guys for watching, and we'll talk later. Thanks so much for watching. I'd love to help you sell or buy a home. Should you have any questions about selling your home, click right here. This button down here will get many of your questions answered about the buying process. Be sure to follow me on social media, the links below, and be sure to hit the subscribe button to stay informed of the Northern Nevada real estate market. Thanks again, and I look forward to working with you.